Hello and welcome to my YouTube channel. My name is 𝗕𝗿𝗰𝗃 and I'm going to be teaching you about liquidity in today's class. So without no further ado, let's jump into what we have for the day. But then, if this is your first time on the channel, you might want to hit the subscribe button and also turn on the bell because, of course, you are going to be getting value in this video. All right. So we're going to be talking about liquidity today. Okay, liquidity setup. So I have about 7 setups for you that I'm going to be explaining. All right. Now, when you see this kind of setups, you should know what to expect. That is the purpose of this video, all right? The first purpose of this video is for you to do what? Understand how liquidity works, okay? And then the second purpose of this video is for you to be able to know what to expect when you spot a particular setup, all right? So what you have on your screen right now are different types of what liquidity of different kind of setups that that has liquidity, all right? That liquidity tends to play out in, okay? That is basically what you have on your chart right now, all right? So I'm going to be explaining them one after the other, all right? We all know that when it comes to structure, okay, liquidity is inevitable, all right? When you're trying to trade structure, which is very important, okay? A great trader once said structure is king, okay? So when you come to trading structure, you cannot do but trade liquidity, all right? So now this is the first setup, okay? You can see. Now I'm going to be explaining this illustration and then hopefully we're going to dive into the chart and spot this on live chat, all right? Now you can see right here that we have this setup, okay? Now basically what happened over here, okay? You actually see that what price was on an uptrend, okay? Or for this particular setup, okay, price was actually coming from a downtrend, okay? So price was coming from a downtrend and then price started going up here, okay? So it went up, formed this high. Take note of that high. It went down, formed this low. Take note of this low. Now, in my previous videos, I told you something about liquidity. I said liquidity usually rests above previous highs and previous lows, all right? So now, seeing that price has actually formed this high and price has actually formed this low, what does it tell you? Of course, it means that liquidity lies above this high and price has left what? Liquidity below this low the moment it did what? It went up, okay? So price went up and it did what? It formed another high, all right? And this high is equal to the previous high, okay? So now in my previous video also, I told you guys that when we see equal highs, it basically means what? We have liquidity, okay? Whenever you see equal highs like this, it basically means we have liquidity. Whenever you see equal lows, it basically means we also have liquidity lying below those lows, all right? So it is no new thing for people who have been following my YouTube videos, all right? So now price formed the new high, okay, which is equal to the previous one. Now basically liquidity lies above this what? Above these equal highs, all right? Now price did what? Price sold again to form what? Another low equal to the previous low. So basically what this is trying to say is that what? Price is forming equal highs and equal lows on the same setup, okay? Now, seeing that price has dropped liquidity on both sides, price has dropped liquidity both on the buy side and both on the and also on the sell side. Okay. Now, whenever you have this kind of a setup, I want you to know something. Okay. Breakout traders. Okay. Now, basically, in this kind of setup, the people that the banks are going to be looking to grab their liquidity, all right, are the breakout traders. All right. Now, when I'm talking about banks and grabbing liquidity, if in case you don't understand, just watch the previous videos, all right? I'm going to link them somewhere around in this video, all right? So now when we talk about breakout traders, there are people that tends to trade the breakout. Whenever they see a consolidation, all right, whenever they see price ranging, they just draw one line up, then draw another line down and see when price breaks this, and then we're going to sell here and price will keep on selling, okay? So now the kind of people that this bank are targeting at the breakout trader. So now you have to understand that price will first of all go in the wrong direction before going the actual direction. Okay, price will first of all grab liquidity in the opposite direction of the actual trend. Okay, so in this trend or in this setup, just like I said before, we came from what? From a downtrend. All right, so the opposite of a downtrend is an uptrend. So price will first of all buy in this kind of a scenario. Price will first of all buy to grab buy side liquidity, then it will now sell, grab sell side liquidity. All right. Now I'm going to tell you why price is buying even after grabbing this liquidity. All right. Now the reason why price is actually buying even after grabbing this liquidity is because price the banks are also after breakout traders. Okay, so basically the breakout traders are going to put buy stops here, and they're also going to place sell stops here. Okay, so basically when price breaks above, they say, oh, it's going to buy, so they go on and buy from here. Then price goes down and hit their stop loss, and then they say, oh, it was a fake breakout. Then price goes down and it breaks below. They say, yes, this is the actual breakout. They then start ranting. This is the actual breakout. Price is going to sell. Their sell stop gets activated. Then the banks take the market back up, and then boom, they hit their stop loss. And then what do they start shouting? Manipulations. The market is manipulating us. The broker is manipulating us. Hey, it is not manipulation. You simply do not understand liquidity. And that is why you have been used as liquidity, bro. You simply don't understand liquidity. You simply don't understand structure. That is why the market use it as liquidity. Sorry for that. So that is basically why the market, okay, I told you guys the market will go in the wrong direction first, and then when it grabs the buy side liquidity, it's going to sell. Grab sell side liquidity, okay, then it's going to retrace back up. Okay, now this retracement is where we're actually going to take our entries, all right? But in this video, I'm not talking about entries. If you want to learn about entries, subscribe to this channel right now, because the next video I'm going to be dropping will most likely be about entries, all right? So price does what? Grab sell side liquidity, okay, activate their sell stops, and then end up hitting their stop losses, okay, and then from this point is where the idons of the market. At this point is where we come in, and then we milk this movement. All right. So I believe you understand this setup. Okay, I'm going to go on to explain other setups. Okay, I'm going to go on to explain other setups. All right. Now let's take a good look at it. Okay. Now the next setup. Okay, which is this. Now just in this setup. Okay, in this setup, I've actually even explained. I've actually explained this setup in previous in the previous one I explained. I've kind of explained this setup, okay? So now, looking at this setup, okay, what do we have here? Sorry. What do we have here, okay? What do we have here? All right, amazing. Now, you can actually see that price was coming from a downtrend, okay? Price is coming from a downtrend, then price started ranging, all right? Price started ranging. I just explained it in the previous setup. Price started ranging, okay? Now, in this kind of a scenario, okay, price will most likely break out in any area, okay? Price might break out first to sell, okay? Now, when price breaks out, it has activated the breakout traders trade, all right? So possibly they're going to produce sell stops below the range and above, and buy stops above the range, so that anywhere the market breaks out, it's not going to keep going them, it's not going to keep them in the trade, okay? So basically now when price breaks below, it's going to activate their sell stops, all right? So they're going to be in the sell trade, and then of course their stop losses will be somewhere around here, and then the banks know this. So once they activate their sell stops, the banks will then go up, hit their stop losses, and take their money. They have been used as liquidity, sadly enough. And then price goes back up, activate their buy stops at this level again. And then just when they think when the breakout traders think they're on the rest of the market, the banks will then pull the market in the actual direction. Bro, they have been used as liquidity the second time. Sorry. Okay, so now the thing is, whenever you spot that, okay, price has actually grabbed sell side liquidity, okay, now once price has grabbed sell side liquidity, the next that price will be looking to grab is what? Buy side liquidity. All right, so once price goes up to grab buy side liquidity, at this point is where you will actually seek your entries to go short in accordance to the other flow. All right, because this is actually coming from a downtrend. So downtrend, consolidation, liquidity grab, sell side liquidity grab, buy side liquidity grab, entry over here, and then we write this. Okay, so as simple as that is, okay, but then very powerful. These are what you can refer to as liquidity setups. Okay, now basically I'm explaining liquidity. I want you to understand how liquidity works and stuff like that. Okay, so now looking at this, okay, at this setup over here, okay, now we can basically see that price was what? Coming from an uptrend, okay, a very sweet uptrend, okay. Price was trending up, it formed this high over here, okay. Price sold down, formed this low, okay. If you've been following me from the beginning of this video and from my previous videos, you understand that whenever we see a high and a low, we know that there's liquidity above this high, buy side liquidity above the high, and we also have sell side liquidity below the low. So price formed this low, okay, formed this intermediate high, or formed this inner high, sorry, formed this higher low over here, okay. and then formed what? This high again. Now, this high is very close to the previous high. You might want to call them equal highs, but then they are just, they are just highs with liquidity line above them, okay? And then this lows, okay, also has liquidity line below these lows, because the retail traders are going to say, hey, this is a double bottom, so we should buy. Then they're going to go and buy. Innocent people. So buy, and then what is going to happen next? Price will do what? Sell below previous low. Don't forget, we are on an uptrend in this scenario, okay? So price will sell below, take out their stop losses, grab their liquidity, and then push up. Now, when sell side liquidity is taken, the next we are looking for is buy side liquidity. I explained it in this setup. Price grabbed sell side liquidity and then went up to grab buy side liquidity. Now, back to this setup. Price grabbed sell side liquidity, then went up, okay, grabbed buy side liquidity. Okay, now breakout traders, retail traders, they say, oh, this is a double bottom, this is a breakout of neckline, so let's go into the market. They go in for buys, the banks do what? Initiate a sell again, hit their stop losses, grab their liquidity. Now, from this point is where the idons, where the idons we look for entry, all right? At this point is where we're going to be coming into the market, all right? And then we're going to write this very, very sweet movement, okay? So that was easy, that was sweet, and that was interesting, okay? When you know this, you wouldn't really be used as liquidity so much again, all right? Now, over to the next. Very simple setup, guys. Very, very simple setup, okay? Now, you can see this, okay? We actually have what? Price coming from a downtrend, okay? Formed this low, formed this high, okay? Simple, should I say ideology again? Above highs and lows, you have liquidity, okay? So price grabbed sell side liquidity, and then after sell side liquidity have been grabbed, the next to be grabbed is what? Buy side liquidity. Price goes up, grabs the buy side liquidity, all right? And then at this point is where you look for entries to go short. Okay, now at this point now, you know that both buy side liquidity and both sell side liquidity has been grabbed. So now price can then move in the original direction in peace and not war. All right. So that was simple. Okay, that was also simple. That was also easy. So moving on to the next setup, guys. This class is so interesting, and I really believe you are getting value from this. All right. So now this setup, okay, this setup on the screen is quite similar to the previous one. All right, because we have what? The same downtrend, but then in this scenario, price did what? Formed equal lows here. Whenever you see equal lows, just know that at some point price will definitely come back to grab liquidity. So you can see price did what? Price shot up, okay? It pumped up, all right? Took out buy side liquidity, okay? Now seeing that we are actually in a downtrend. Okay, now guys, understand these setups. Understand them, look at them very closely. Look at them very closely. Pause the screen and look at these setups very closely. And some of you just never pause the screen, guys. Some of you just never pause the video. Okay. Now you can see that in this setup, price grabbed sell side liquidity first. Okay. Price grabbed the liquidity below the previous low first. Okay. And then went to grab the buy side liquidity. So price went the original direction first, then went the wrong direction second, and then ended up moving the original direction. But in this setup, price went the wrong direction first. So when price goes the wrong direction first, you can actually look for entries to go and write the original direction. Now, how do you know the original direction? Look at the trend. Now, this setup actually tells you that this setup is coming from what? From a downtrend. This is coming from a downtrend. Okay, form this low over here, form this high, formed equal lows. Price went up to take out this high. So from this point, you can look forward for opportunities to go short. That was easy. But in this setup, price went the right direction first. So you have to wait for price to retrace to take buy side liquidity. You're coming from downtrend also in this scenario. So price formed the low, formed the high, took out the low, took out the high. Okay, so price went the right direction first. You have to wait for price to go the wrong direction. Price goes the wrong direction, you look for entries around here, and then you're good to go. All right. So that was also easy and amazing, right? That was easy and amazing. Now, to the sixth setup, guys. To the sixth setup. If you've not subscribed yet, guys, you should actually hit the subscribe button. You really should. You really need to do, okay? So this setup now is actually similar to the previous one. It's actually similar to this one, okay? Actually similar to this one, all right? Actually similar to this one. So basically, price coming from a downtrend, okay? Formed this low, formed this high, formed this higher low over here. Then price took out buy side liquidity. Okay, so seeing that price has gone the wrong direction, you look for entries over here, and then you're able to grab to catch this movement. Okay, seeing that price has grabbed liquidity above previous high, this is basically buy side liquidity. All right, so you can actually look for opportunities to go short. All right, as simple as that is. So one last interesting setup I want to show you guys is this setup over here, guys. Is this setup very, very interesting setup, guys? Very interesting, guys. Now, this is the setup right here, guys. All right. Now, I told you guys that whenever you see price consolidating, okay, it means that or whenever you have a consolidation, breakout traders are waiting to trade the breakout. Okay, so basically, whenever you see that we have this kind of a consolidation, all right, you know what a consolidation is? When you see price ranging, so it means that you most likely have breakout traders waiting to trade the breakout. Okay, so what you're going to be saying is, whenever the market breaks out, if the market breaks up, you go for a buy. If the market breaks down, you go for a sell. That is what the breakout traders are going to be telling you. But bro, let me tell you what the banks do. It is not a fake breakout. You simply don't know how to trade liquidity. You simply don't know how to trade market structure. All right. So now when you have a consolidation of this manner, all right, I told you price will most likely go the wrong direction first. Now look at what just happened here. Price went the wrong direction first over here. So the breakout traders are going to jump to the market. Oh, it's a sell. Go 200 lot size. And then they get stopped out, guys. They get stopped out. And that's so bad. And then they go in for a buy again. They say, yo, it's a buy, it's a buy, it's a buy, it's a buy. Full margin. They go in for a buy, and then they get stopped out again. All right. But then the thing right here is that whenever you have this kind of a setup, you have to understand that liquidity is doing what? It's lying above here, and price needs to grab both liquidity. Okay. So price will most likely go in the wrong direction first, taking out this sell side liquidity. All right. You can actually look for entries here, but this is quite an aggressive entry. Okay. So when price goes the wrong direction first, seeing that this is coming from an uptrend, so going down is the wrong direction. So whenever price will most likely go the wrong direction first. So when price sells down, you can actually seek entries here. But like I said before, it's an aggressive one. Okay. So after price has gone the wrong direction, price will then go up, all right? Then go up the actual direction. But then this time around, it's not yet time to go in. So when price goes up the right direction, activating their buy stops, price will most likely, sell back again. Then now it's on this sell back, you can look for opportunities to ride the actual direction, all right? So that was easy, and with no much wasting of time, let's jump into the actual chart and see what we have on the chart, okay? So I highlighted a few of them on the chart, so you're going to be looking at them, guys. So you can see it over here, guys. This is one over here, right? This is one over here. You can see it. Now, this is a consolidation here, guys. This is a consolidation here, guys. Look closely. You can see this consolidation here. Sorry for that. Now you can actually see this consolidation here, guys. Now, what did price do? Okay, price took out the sellers first. Where's my arrow? Where's my arrow? Where's my arrow, guys? Where's my arrow? All right. Now take a good look at this, guys. All right. So you can see over here. Okay. Now this was the wrong direction price went at first. Okay. Now the breakout traders are gonna say, hey, it's a breakout. Sell the market here. All right. But then this is actually just price grabbing sell side liquidity lying below these lows over here. All right. You have liquidity lying below these lows, so price will most likely come down, and then like you can see price grab liquidity over here. Okay. Then you can see, look at what happened now. Price still later went up. Guys, don't forget, this is what we're looking at here. Okay. So this actually is what the equal highs. Liquidity also lying above here. So price broke out. Okay. Price broke out. All right. Now, after price has gone the wrong direction, if you actually took entries here, you will have had a good trade. Okay. You have really had a good trade. All right. Now you can see that price did what? Price broke above here, and then price still had to come down. Look at where price came down to. And then here you can actually look for entries right up to this point, and then you are good. All right. So you can actually get aggressive entries here, or you can choose to have better entries here. Okay. And then write this. over here. All right. Now let's look for another setup, guys. This is another setup. This is another setup. So you can see we have what? Price coming from an uptrend. All right. Price did what? Price formed equal highs here. This high and this high are actually equal. All right. Let me highlight them for you guys. Now we have equal highs over there, all right? Equal highs. So you can see that price took out this high. With this movement, price went above this high, grabbing the liquidity above these equal highs, all right? Now the thing right here is that after price has taken this, after price is actually taking this buy side liquidity, okay? Price also had to go down, okay? Took out this liquidity, here, all right? Price went up, okay? Sold down, took out this sell side liquidity over here, all right? And then from this point now, price went bullish. So the thing right here is, when will you have entered? Okay, let me just draw a quick analysis for you right here on this index. Okay, so we have equal highs. First of all, where are we coming from? You can see we are coming from a downtrend. So we have what? Equal highs. Price did what? Drop equal highs. You can look for sell entries here. Okay, sold here. Good trade, guys. Okay, then now you can see that after price has taken out this high, now at this point you have a shift to market structure, guys. That is more like a different topic on its own, guys. And I think you just follow me so that I can explain to you in the next video. All right. So, but then just understand that equal highs liquidity was grabbed. So whenever I say equal highs, be careful, because price will most likely come back to grab liquidity. All right. So now let's look for another setup, guys. Maybe one more setup, and then we'll actually call it a day. Okay, we're gonna just end the video right here. Okay. Now this was one setup I saw. Okay. This was one setup I saw. All right. This was one setup I saw, guys. All right. So this was the last setup I explained. Okay. You can see the movement, guys. You can see the movement. Now let me explain. Okay. Consolidation right here. Jeez, what was that? So consolidation right here. Okay. You can see this little move right here. Let me show you guys. You can see this little move right here. This little move right here. Price went the wrong direction first, all right? And then went up, came back again, taking out their buys the second time, all right? Hitting their stop loss for the second time. And then at this point is where you look for entries to go bullish. You can see how the market went, guys. Very sweet trade, all right? So consolidation, price took out their sell, okay? Activated their sell stop and hit their stop losses, okay? And after price broke to the upside, it hit their stop losses again and then went the right direction. All right, so I believe this video was helpful. You should follow my channel for more. Right, subscribe to this channel and also message me on WhatsApp. My number is going to be on the screen. All right, stay in contact with me. You're really going to learn a lot. All right, and I'm going to add value to your trading journey. So it's your trader king Wesley speaking. I'll see you in the next video. For now, I'm signing out.